One thing is, I think that what matters for people is how many times they've seen it come and go.
Yeah.
So if you were not aware of like the first 3 cycles, for example, and you knew about it in the 4th cycle, or at least you paid attention to the price, you remember seeing it in a bull market, you remember seeing it in a bear market, you see it in a bull market again. That for them, that's only the 2nd cycle, even if it might be the 5th cycle of Bitcoin. And when you look, of course, if you look at a price chart in linear form, you don't even see those earlier price bumps. So you only ever really have your memory, or in visual form, you see the past couple cycles. So I think people have to go through a handful of cycles, not just that Bitcoin's gone through those cycles, but that they've seen it gone through those cycles. I think that's important. And 2, the volatility is still an issue until it's not, basically until it's widely adopted and liquid enough.
Lyn Alden, while often operating somewhat under the radar, is a brilliant economist with an exceptionally bullish outlook on a specific asset, Bitcoin. If you're not already familiar with her, Lyn Alden is an accomplished investment strategist and financial analyst, highly regarded for her expertise in macroeconomics and equity analysis. She recently took the stage at the 2023 Swan Bitcoin conference, where she provided valuable insights into Bitcoin's potential and the catalysts that must come into play for its continued growth. In her interview, Lyn Alden discussed 2 crucial catalysts necessary for Bitcoin's future success. The first catalyst she highlighted is the importance of individuals experiencing multiple cycles in the cryptocurrency space. Many people had their first encounter with Bitcoin or cryptocurrencies in the groundbreaking year of 2021. However, Lyn pointed out that for most, the narrative now might be that the crypto market is essentially dead. It typically takes going through the 2nd or 3rd market cycle for individuals to develop unwavering belief in the resilience of the cryptocurrency space, recognizing it as a substantial, long-lasting market rather than a transient trend. The second catalyst Lyn emphasized is the market capitalization of Bitcoin. Despite its considerable size, she argued that the crypto market still lacks the necessary trading volume to comfortably accommodate sovereign wealth funds and large institutional investors. In essence, for these major players to enter the cryptocurrency space, the market needs to mature further and offer the requisite liquidity and stability. To gain a deeper understanding of Lyn's insights and her vision for how the next Bitcoin cycle will play out, make sure to stick around until the conclusion of the video. Her perspective on the future of Bitcoin is both informed and insightful, offering valuable guidance for those looking to navigate the cryptocurrency landscape.
Bitcoin has to reach certain levels of market size and liquidity before it even interests certain bigger players to get in. So when Bitcoin had $1,000 in daily trading volume, a person couldn't put in $1 million. When Bitcoin had $1 million in daily trading volume, a billionaire couldn't, you couldn't come in with $1 billion. It wasn't ready for sale yet, for example.
Yeah.
When it trades $1 billion a day, these large pools of capital, like a $1 trillion insurance fund, it's just, they look at that and it's like a small pond for them. It's like they would sneeze at it and it would move the price. When it does tens or hundreds of trillions of dollars in volume, then these bigger players can start looking at it. So it's almost like you have to kind of saturate, or at least you have to hit a certain level before you even get interest from the next level. So now we're at the phase where the BlackRocks of the world are kind of paying attention to it. So one is just, you can keep going up in that one psychological cycle. So people, once a person has directly seen 3 cycles, for example, that's hard to forget. And then 2, that liquidity. And then the other angle, like that's kind of Bitcoin winning. The other way is the dollar losing. The dollar tripping over itself. So a lot of people here, maybe not everyone, is seeing what happened in the recent bond market move, right? So long end bonds have sold off dramatically in recent weeks and months. The yields are spiking. And whether or not what happens in the next few months or whatever, I think that's not the big story. The big story is that historically, when you get larger and larger debt in an economy, eventually you run into a big bubble. And then what happens is the public sector absorbs that debt onto the public sector. Right? So that's what we saw in Japan over the past 30 years. We saw a gigantic private debt bubble, and then kind of a deleveraging, printing money, and then a lot of that debt is now on the public sector, and the private sector in Japan has less debt relative to other metrics than it used to, less net debt, because a lot of that's now on the public sector. And in the United States, we saw pre-global financial crisis, we saw more and more private debt growth. Then we saw the whole collapse and the money printing, and now we see some degree of household deleveraging and things like that, but all that debt's now on the public level. And then what happens is when you run into the next cycle or the one after that, and all that debt's already on the public level, you're getting higher and higher interest expense. You're not offsetting it with lower and lower interest rates, right? So for example, during the past 40 years in the United States, we had higher and higher public debt to GDP, and we had lower and lower interest rates. So the interest expense on the public debt was never really a problem. But once we hit the point where you hit zero and you bounce off zero, and now you're just kind of either going sideways or you're going up in interest rates while you're still going up in debt to GDP ratios, that's when you start to get into an outright fiscal spiral. And if the Fed finds itself having to do QE, even when they have above target inflation, because they just have to monetize the deficits, that's kind of a checkmate scenario. We already see Japan in that scenario. So
do you think we've crossed that event horizon now?
I think we're flirting with the event horizon. Okay. Yeah, I mean, basically, once you get over, say, 100% debt to GDP, and it's usually a couple mix. It's usually like you get above a certain amount, you bounce off zero interest rates, now you're just either flat to up, and then you run into some degree of commodity shortage, energy shortage, a pandemic, whatever you run into some sort of like supply side thing, and that combination is like fireworks.
Yeah.
And so Japan today, they have a 2% inflation target. They've been above their target, and they're still doing QE because they're in that weird position. So money creation happens in one of two ways. Either banks lend it into existence with fractional reserve banking, or you monetize very large government deficits. And when public debt is small, like say back in the United States in the 70s, most money creation comes from bank lending. And if you raise interest rates, you kind of slow down the bank lending. And although you do increase the government deficit because of your interest expense, that's a smaller portion. So higher interest rates are suppressive for money creation. Whereas if you are all the way in Japan's case, where you have like 250% debt to GDP and very little bank lending, it's a very sluggish economy. If you raise rates, you're actually potentially accelerating money supply growth because now the government is pouring more money into the economy due to payments on its own debt levels.
Which is very counterintuitive.
Yes.
Yeah.
And so that's kind of either the end stage of the currency or at least kind of the end stage of what, say, Ray Dalio would call a long-term debt cycle. So some sort of major devaluation, recapitalization of the market. So if the dollar trips over itself, and the Fed finds itself in kind of what Japan's doing. But Japan has a trade surplus, current account surplus. They've built up a positive net international investment position. The United States is running a structural trade deficit. And if they also find themselves forced to constantly do QE just to maintain the bond market, and Bitcoin's still here, and people have seen 3 cycles of Bitcoin, I wouldn't want to be short Bitcoin, let's say.
Yeah.
But now, the way bear markets often work is first it's the scary crash, and then it's like the boring malaise. And that's when people that are not focused on the ecosystem forget about it. Like most people outside of Bitcoin don't care about Bitcoin right now. We care. They don't care. And so right now, I think we're in the then they forget you phase, at least cyclically. When we think like bigger picture, the whole first they fight you and then they join you, I think that's going to be a multi-phase process. Like maybe BlackRock wants to join us because they can make money, but there's other things that are still going to be in the fighting us phase, right? Yep. And even things that join us could later fight us, And so I think we're still going to be in multi-years of some are joining, some are fighting, some are joining and fighting. They're in the Thunderdome with us now, and BlackRock maybe has an opinion on a soft fork in the future, and we got to deal with that. And so I think that's a non-binary thing. There's more and more. It's going to be both joining and fighting us, I think. And I think one of the biggest battles is still going to be on the privacy front. So more and more entities are like, look, you can have Bitcoin, but it's like we want to know who has the Bitcoin, and we don't want to have privacy on Bitcoin. And I think that's the thing where there's still going to be a lot of battles to fight, is the right to privacy, the right to build and deploy privacy tools, the right to have privacy tools on your phone. That's the type of thing.
Lyn Alden, the brilliant analyst, has provided an enlightening analysis of Bitcoin's current state and its future trajectory. Her unique perspective, underpinned by her extensive expertise in microeconomics and equity analysis, offers a profound insight into the complex world of cryptocurrency. Alden's insights serve as a testament to the multifaceted nature of the crypto landscape, where understanding the nuances of the market is crucial. Alden's observations, marked by their depth and clarity, prompt valuable contemplation. They not only align with conventional wisdom but also challenge preconceived notions. Her comprehensive analysis sparks a thought-provoking discussion about the future of Bitcoin and the broader cryptocurrency space. It's an intellectual journey that can reshape perceptions and foster a deeper understanding of the evolving digital asset landscape. If Lyn Alden's insights resonate with your own understanding, or if they challenge your preconceived notions, I encourage you to share your thoughts in the comments. The dissemination of her expertise can serve as a valuable resource for a wider audience seeking a comprehensive grasp of the cryptocurrency domain. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.